Hi there, it's Bill with Smart Trades, and it's March 19th around 10:30 Pacific. Lunch is just about to end back east, so interesting time to take a look at the markets quickly. Um, as noted before, I had counted an ABC down to A, noted here on the S&P cash, and my thinking is that this is an ABC back up, and that we're in C of B on this rally. Now, I posted this to my for my clients yesterday, so some of these charts are a bit dated. I'll try to bring them up to date as much as possible, but the bottom line is that we have breadth divergences. We've got a 5 waves up in the C wave position. We're at resistance, so this is a likely spot to look for the market to turn. Here's the updated chart basis the Dow, and you can see the clear 5 waves up within C, even a possible wedge, and a 5 waves up within 5 of C, and then the sharp impulse drop off of that high. We've got A equals C just under today's high, and we've got breadth divergences which are quite severe, not confirming the new high in the Dow early today. And just a quick look at how I would look at the very short-term picture. Here's a 3-minute chart of the spiders, and you can see here I've labeled 5 waves down. The previous 4th wave comes in around 116.20. That's also a 38% retracement of the entire leg down. So this is not an unlikely target for a possible wave 2 rally to end on. I would, as always, take it one step at a time. You've got to see some price confirmation when we get there, but this is the way that you take a look at markets on varying degrees of scale and look for low risk entry points. And perhaps if I'm able to, I'll try to update this later as we if and when we approach that 116.20 area. But it's a pretty nice looking setup. We'll see how it pans out. And here's the longer view of the cash S&P. And just quickly, again, we've got the ABC down of A. We've got the B wave rally, which I think has terminated or will terminate very shortly. I favor that it's ended, but we'll see. And then from there, 1.62 times A comes in around 1,004. 38% of the entire rally labeled A comes in around 970. These are approximate ballpark figures, but that gives us a range, somewhere between, say, the 960 and 1,040 area would be where we'd expect C to terminate if indeed this is an ABC decline correcting that A wave rally up to the January peak. And I would prefer that middle area just around 1,000. It's a nice big even number, and it's 1.62 times A, 1.618 to be exact. But again, that's getting kind of far ahead of ourselves, but it gives us at least a tentative projection and something to compare the actual price action to as it unfolds. And also, very important, the dollar index has carved out what looks to be a series of impulse rallies and corrective declines, pretty clearly corrective, both in terms of volume and price action and momentum and so on and so forth. The big question is it a series of 1-2s, 1-2, 1-2 to the upside, or is this 1, 2, 3, 4, and then a 5th wave that's going to take us to 82 to 84, something like that, and then we'll have a larger correction. The implications are, if it is a 3rd wave up that we're expecting from here, in other words, a 1-2, 1-2 rally, is that we've got quite a bit further to go. I would be, very watchful for that, because the implications are not just important for the dollar index, obviously, but also for the stock market. In that, the a 3rd wave rally in the dollar, I believe, would be quite deflationary, and might be an indication that indeed we are unfolding in a third wave also to the downside in the stock market, in the S&P and the Dow and so on. At any rate, I don't necessarily favor that basis the stock market at least, but we have to look at this for what it is, and it's certainly possible to count this as a series of 1-2s to the upside. So let's keep an eye on the dollar here over the next several days and weeks. And also, here's what I posted yesterday for my clients. The rally off the lows in the dollar is clearly impulsive. It's not clear exactly how to label that at this point, but the bottom line is to keep it simple. We have what appears to be a corrective decline and an impulsive rally. On the surface of it, let's assume that's a change in trend. Here's an update of that chart. And again, you can see the impulsive nature of this rally, which can already be counted as possibly 5 waves up off the low. So we have a corrective decline down, an impulse back up on good volume. So if we get a corrective decline off of this high, it's probably a buy in the dollar. How far it's going to go remains to be seen, but I would be alert for a corrective decline and a possible buying opportunity there. Anyway, thanks so much for watching. Have a great weekend if I don't post again, and see you Monday. Bye-bye.